Hi, welcome to this video day, which is on the 17th of May. It's Thursday, and it's 8:30 p.m. GMT. Now, we're just going to take a look at the outlook of the USD against a number of currencies. Some really good risk to reward trades in our view. Now, dollar's obviously been on a fantastic run recently to the upside. Is it going to continue? I personally think it will. I think the dollar now is becoming an established uptrend that could be in place for months. And basically, any retracements or pullbacks for us are buying opportunities. Now, when we're doing the charts today, I want to just focus a little bit on sentiment, okay? A lot of traders write to us and say, well, real problems catching and holding big trends. I've either stopped out too early, didn't get in, okay, or was nervous and banked my profit. That's a problem for all traders, okay? Now, in terms of what I'm going to go through today is a little bit looking at the sentiment behind the chart. If you can judge that, it's not difficult to do. You'll then confidently go for trades that could be like 300, 500 pips or more. Not only detect the trend coming, but have the confidence to hold. Sentiment analysis is very straightforward and will really help your technical analysis. Right, what we are going to do now is going to look at some trade setups. I'm just going to use the charts from our member center. Just keep in mind that when I'm looking at the charts, my view as of right now, obviously it can change in line with the market conditions. If you want all our trading techniques and our daily technical analysis of 14 major pairs, you can get live access to our member center on the link beneath this video. Right, let's go and take a look at some opportunities. Our member center, just very quickly for new viewers, in terms of our analysis, twice daily, so we don't watch price action day. We do it once, when London opens, and then we come back at the end of the day, see if we need to make any changes to our levels. We're really after big moves, okay? So, the minimum we're really looking for in a trade is 200 pips, but obviously if we can get them, 500 pips or more. We've got quite a few 500 pip profit trades, okay? So we only want to focus on big moves. We don't clutter our charts up with lots of lines. We only put the big levels that really matter to the key players on the chart, which you'll see in a moment. But before we go and look at some currency charts, what I want to do is just look at this chart, because if you're looking at the USD, always keep your eye on this. It's the 10-year interest rate contract, which is just basically if you've got this market rising, the bond market, means that the perception is that US interest rates are rising. And the USD has obviously been very firm over the last few weeks. Started to move up here, okay? Gets above this 3 level, then we drop into a little sideways channel. And then we moved significantly higher over the last few days. This 3 level is very important in terms of big institutions and equity managers. Obviously, when interest rates are going up, it's not good for the stock market. So we could see if this bond market continues to go up, could see stocks correct, which is bullish for the USD. But the USD is underpinned by interest rates, okay? And it's the only central bank, the Fed, that is on a hiking path. It's a big fundamental in place. I don't think it's going to be turning around any time soon. This market, always a good one to watch, okay? Nice and firm at the moment, so is the USD. Let's go now to, where are we? Want to go to, charts. Couldn't remember which page I was going to. When we do our charts, we always use the CFTC Net Traders positions. This is how we really find the big trades, basically. It'll help you detect trend changes and also measure how far a trend might go, because you can basically see how the big players are positioned behind the chart. Now, there is an explanatory video on how to use it beneath this one, so just click the link. But in just general terms, what we want to do with the CFTC Net Traders positions, basically look for speculators to be heavily long or short, and commercials, the smart money hedgers, to be against them. We will go with the commercials. Speculators always get caught out at big market turns, and you'll see a few examples. Right, let's go to Euro USD. This has been a COT generated trade for us. And yeah, what you have is when you see the price move up here, okay, you get speculators move to a record net long position in the euro, yet they can't take out 124. Okay, so it's a bullish extreme. It's going to peak. We were just able to come in just through this 20-day moving average, and you can see she tumbles down. A little bit of a rally, and now we're at 118. So from basically our first position in, it's 550 pips, and the second one, 300 odd. So yeah, really good profits. Okay, that's a COT generated trade, and what you know is if you have the speculators, really long, really short, once the market turns, they'll get taken out of the market. And that's what's happened here. However, I think we're going down even further. 116. I've got 114. I think longer term we could go to 104. But that'd be a longer term. Euro for us is just very, very bearish. And if you're following a big trend, you can see I did 2 trades. That means you can bank one out, okay? And reduce your exposure, put some profit in the bank, and basically hold the other one. And you can always vary the exposure, okay? So for example, we took half out here, put it back in on the rally, so we get a little bit of extra profit out of the trade. When you're following big trends, you don't be behind the first level of resistance. That is here. We always normally put a stop back behind the second level. So 120 is very firm resistance for the euro. So for us, going a lot lower, this trend has only really just started in our view. Everything at the moment for us is bearish about Eurozone, from economic data to inflation. Central bank can't reduce stimulus. You've got geopolitical problems in Italy as well. Now, moving on to GBP USD, again another COT generated trade. Once we see these speculators come up here, they're pushing the price up. This candle here, speculators are as long as they've been since Brexit. Okay, commercials as short as they've been since Brexit. So our view was basically, well, market was just too bullish about at the time. The Bank of England raising rates, but you can see from a technical perspective how to play a trade like this. You've got really bullish speculators here. They push it to a new daily high through that candle tail. She drops down, and then the speculators get run out of the market, and now we're kind of in a bit of a sideways consolidation, let's say. But this one is near enough 730 pips. Okay, obviously they don't always work as well. You're not always going to get big moves off the COT. You might get stopped out first of all, but normally you will catch the big trends if the divergences are big enough. Again, for us, stop. I see this is the first level here, really, about 135, 50, 60. Second level, 136. Our stop is back behind this 20-day moving average. What you see is a 20-day moving average when a trend starts will very often give some support to it, okay, or give resistance when you've got a downtrend, okay? So you can use it in that way. Hope I made that clear. Right, pound for us going down to 131, okay? Let's just need to see, if we break through the recent lows. Okay, what have we got next? We will have the Australian dollar. It was COT generated trade when it started back here. Again, speculators heavily long, commercials heavily short. Caught the down move, but we did stop ourselves out in this blue candle here when it came through that 20-day moving average. Banked the profit, then waited to see if the rally would fail, and it does. But hasn't really done much since we've entered recently. We're in at 77.65 and really 75.30. So it hasn't really done much. For us, the Aussie dollar going far lower because, yes, commodity currency. They're sensitive to risk. They're also sensitive to commodity prices, and we think commodity prices are going to break down. They've been pretty firm recently, but the Australian dollar hasn't gone up. The central bank aren't going to be raising rates, they'll probably be cutting them. Aussie dollar, one of the most overvalued currencies in the world. So for us, going down. So we're actually literally coming into the first level of resistance here. I'll stop behind there. 72, then 69 on the downside. Get risk off, we'll really see this move to the downside. So it's kind of been a downtrend, but it's been pretty slow so far. Hoping it speeds up. USD JPY. This is the only pair we've been bullish, bearish the USD on, and that's simply because firstly we think the yen is very oversold, but we also think there's a move to risk off coming as well. But we did try a short trade. We got stopped out. We're waiting now to see if support gives way. We want to swing trade it anyway, just for a correction of oversold. But really got the eye on risk off. If risk off comes, the yen will be the currency that moves the strongest, with the USD behind it against all other currencies. Last one here in this batch of majors is the USD CAD. Extremely bullish of this. I had a decent trade through 128, came up, got stopped out here. But it was a reasonable profit. But I did think it was going to run on. But it's come back, okay? And we've now re-entered at 128.30. She's actually dropped just below our entry, but we're blue. I did this chart a few hours ago. We're blue, just coming back to the 128 number. I think we're up to 131, then 135. And the reason for this is that crude oil, it's been in a massive bull run. And I just think it's going to break to the downside. And if it does, then it's really going to hurt the Canadian dollar, because Canada is an oil exporter. Despite the fact that oil has been very firm, okay, in this period here, it hasn't helped the Canadian dollar. So if the Canadian, if crude oil goes down, it's going to give fresh momentum to the dollar on the upside, okay? So there's those five majors there. Let's look at some others and some minors that many people might not consider. Let me just find them. Here we go. Okay, this is one of our favourites at the moment, which is USD NOK. Okay, reason we like it, it's the Norwegian krona, Norway, Europe's biggest oil producer. Crude goes down, this one will get hurt more than the CAD. We've had one decent run in it up there, and now we've come back in again on the dip. Okay, so down at 801. And breaks higher, down up to 840 in our view, then 870. So a long way to go to the upside in our view. And in terms of the NOK as well, there's no COT net traders positions, but speculators are heavily short the USD. You can see it from bank data, so they're going to get taken out on stop. And it's one of the most overvalued currencies against the USD. So plenty of downside breakout higher. I'd strongly recommend you check out the USD NOK. Just a small position, can give really good profit potential. Another one to keep your eye on is this one. It's a very unique currency, let's say. It's the Chinese yuan. And basically it is, to a degree, manipulated by the Chinese authorities. The central bank, has been keeping the US dollar down. But we've got the potential of trade wars, haven't we? Well, China will basically let the dollar rise, so it gets an advantage for its exports. Even if they do concede, to US demands, then I still think they're going to let the yuan rise. I just don't see them not doing it. Also, risk off comes. US dollar is going to rise, and this currency is actually one of the most overvalued in the world as well. So a breakout, dollar's already working its way higher. Breakout, and we should see some nice upside in our view. And if you look at the dollar, and I know it's sort of common to focus on the majors, but there's many minor pairs that have done really well. This is probably the weakest emerging market currency. And while the dollar's gone up really nicely, it's thousands and thousands of pips, dollar's probably going to go higher. This is just a buy on the dip. Now, okay, I think it's a little bit overcooked at the minute, but any dip I see as a buying opportunity. Again, good pip spreads in the try as well, USD try. So it's not a wide spread. Another emerging market currency, a wild one. See how the dollar's really hit it hard. But again, far more strength to come. 21. And what are we now? About 1978. Plenty more upside. Yeah. When a big trend gets in motion, if the big fundamentals support the trend continuing, stay with it. Also, the CRT net traders' positions, despite this big rise up, have the speculators still short the USD. Okay, commercial still long. So, big trends in motion can obviously last a long time. Here's another big mover, the USD huff. Okay, again, this one's got far further to go on the upside. Let's go come to a major NZD USD. Good COT setup here because you had really big speculative position there, post by commercial shorts, and we were coming right in to a resistance level where they had similar positions. So the odds favour to break down in our view. Just sell weakness. We just couldn't get through this sort of resistance here. And again, a really good move to the downside. So again, a COT generated trade. Again, if you're following big trends, first level of resistance. Well, I think we could come through this again, actually. But that's the first level of resistance. Second there. Sorry, I put the stop behind that level. And yeah, in terms of it, I've got 68. Okay, as the first target. But if that breaks, it's 63. Okay, so another 500 pips to the downside. And New Zealand dollar, another commodity currency, and obviously we're bearish of all the commodity currencies. USD, SEK, Swedish krona, another big trend. That correction there was the first decent correction. It was worth a buy through the 20, and now she's going up. So 20-day moving average supporting her. Not just going to here in our view, she's going to 9. Okay. There's a variety of US dollar pairs there. Okay. And yeah, we've seen good movement in the US dollar, particularly in the lesser currencies like the emerging currencies, smaller European ones. But is it going to go much further? Big fundamentals say yes. Also, commodity currencies, they're now going into downtrends. And then, of course, you've got the euro. I think that's now started a downtrend. British pound, actually, I'm kind of bearish of it, but I don't think it's going to be as weak as the euro. I think the pound might have a decent move to the upside at some point, but not just yet though. Potential for risk off to come. Like I said, if you get big volatility in the market, which we're expecting, the US dollar will soar higher. So our view is, obviously our view is the USD is going up. Obviously, it's going to have pullbacks and retracements, but they're buying opportunities. And also in a lot of dollar setups, the dollar is a buy on breakouts. Right, that is my review of the USD. So thank you very much for watching me. As usual, take care and have a good day.